Good evening. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, October 17th, 2006. And I've got a quick video, I think, here today, just a few ideas. Couldn't find a lot of good low-risk setups. So let's start it out, though, with one that I do like. And I do have a position, and I bought a little bit of this stock today. The name of the company is QLT Incorporated, symbol QLTI. We're looking at a weekly chart of QLTI right now. And you can see here that the stock had a bad year last year and then came down, made a nice little bottom in here as these moving averages have all crisscrossed. Now we've got all these moving averages lined up the way I like to see them. That is the short term above the intermediate term above the longer term, and they're all just starting to rise. We've also seen a little bit of increase in volume on the rallies, and that's always good to see. It shows that the buyers are getting more aggressive, and it looks like the stock is getting ready to move higher. And I think that, just we could start with a target first. I think right up above that $9 level is really where the stock initially will go. But there's a very big short position in this stock as well. Back in January, there was only 2.8 million shares that had been sold short and not yet covered. As of September 15th, that number is 4.7. So if I can get above this level right in here, about $8.40, there's going to be about 2.5 million shares of shorts that are in a losing position, and that could provide fuel for the upside that maybe drives this stock up towards $10, $11, $12 a share. Let's not get carried away. Again, our price target is going to be $9 a share. You can see the volume came back into this stock nicely today. Last week we had a good update with big volume. The volume on the pullback has been light since then, and today again we saw that reemergence of volume. Now on a 10-minute time frame, here's what I think we should look at. We've got the stock that rallied here today. Now I bought the stock right around I believe 802 or so. I think you can look for the stock to pull back below 8 and then maybe buy it above 805. I think I'll add to the position if it does that. The small position that I do have right now. My stop would go just about let's call it $7.89. And again, I think that the stock ought to reach at least $9 a share. Next up is a stock that just got some kind of news. This is New River Pharmaceutical, NRPH. And we had been looking at this as a short back in here, if you go back and check the archives, and made some pretty good little plays. This shows you the danger of being short a biotech stock, though. Let's look at this weekly time frame. You can see that, yeah, it was in a nice downtrend, but boy, did things change overnight for this stock. And there's a big short position in this one as well, and I think that's what's helped exaggerate the upside in here. As of September 15th, in New River Pharmaceuticals, the short position stood at 5.9 million shares. So obviously not one of them is making money, and that's really helped to push this stock higher. And I think it's going to continue higher. This first little pullback looks like it's probably enterable, if that's a correct word to use. But anyways, what I'd like to see is a pullback towards about $46.35 tomorrow morning, and then I'd like to buy the stock on strength above $46.70. Once it can do that, I'm going to then place my stop at $46.25, and I think the stock can return up towards about $49.5 a share here in the short term on NRPH. Now I've got a short position for you, FORM, and I've got one thinly traded stock that I'll mention at the end here after this. This short position isn't the highest probability, I don't think, because we've still got a advancing 50-day moving average, but that could turn because it's starting to flatten out. We're starting to see this pattern of lower highs and lower lows. So right now, and we've just seen a little bit higher high right in there if I count that one, but I think there's going to be one more thrust lower and maybe a test towards that 200-day moving average at $40 a share. Now, I'm not going to be that aggressive on the target. Instead, I'm looking for a retest of about $42 a share as the target. What I'd like to see this stock do is rally somewhat up to about $43.85, up near that 5-day moving average. Once it rallies up to there, I'm going to put an alert on it to sell this stock short below $43.60. Once I'm in the stock, my stop will go a nickel above that level there. So we'll set our stop at $43.90, giving us about a 30-cent risk. And I think that the stock has the potential to drop about $1.60 from entry. So would you risk 30 cents to make $1.60? Seems like a reasonable risk reward if the stock can fail. So it all depends on what the stock does and how it sets up. The little stock that I want to mention here is trading at $1.56. This setup looks kind of similar to the stem cell plays that we've had recently, in that we've had some nice volume on the up moves and low volume consolidations. Now we've got the 10-day moving average above the 20, which is above the 50, and I think the stock has the potential, if it could get really, a fire lit underneath it, to rally up towards that 200-day moving average. Let's just be conservative and call that $1.85. If I look at the weekly time frame, you can see the stock has had a lot of trouble, but it may be turning at least good enough for a bounce. It's still a terrible stock, when you look at this weekly time frame, but there's been enough of these little junk stocks that are rallying strongly that it merits our attention. The stock moved past a short-term level of resistance. I didn't buy it there, but I'd like to see it pull back to $1.55 and then buy it above $1.50, above $1.58. I only want to do it after I see it pull back to $1.55, though. I think worst case stop is down here. I think that's probably a little bit too aggressive, maybe even right here, just below that 5-day moving average at $1.48. The name of the company is Curis, symbol CRIS.